Interbank lending got crushed, but don't ask those in the financial establishments to acknowledge it. You need to understand what's happening right now. All thanks to our friends at the top, the Federal Reserve. You came here for the truth, so let me unveil that for you. Today we're going to look at what's happening with interbank lending. We're going to get into other topics as well. I want to begin with this. Volatility index manipulation contributed to the market plunge last week, according to a whistleblower. Now, CNBC spoke with this individual. He wouldn't identify himself, but he said that he knows what's going on. The whistleblower claims to have observed irregular patterns in the market that he believes may have impacted investors. I would suggest to everybody who doesn't know already, if you haven't followed this channel now, the Federal Reserve themselves have admitted that they have a short volatility position. They have been manipulating this market. The admissions came out in their meetings. That's all transcribed. I showed you the quotes on the channel before. We don't need a whistleblower. I don't know who this whistleblower is. I don't trust it because I simply can't verify it. There's no real hard evidence here, but it doesn't matter. It really doesn't matter. The Fed themselves, in their own statements, have talked about the fact that they short volatility. They manipulate the system. Admittedly, I mean, do we need any other details? You can see for yourself what has happened in this highlighted portion, that interbank lending has decreased. So there have been some charts out there. If you go to the St. Louis Fed website, what you'll find is that they've actually been discontinued. There's some misinformation happening there, but you can see this for yourself. Federal Reserve statistical release, you can see that as of February 9th, 2018, it is new information. And you will see that this is in fact the case, okay? Just in a short period of time, it has declined dramatically. All right, now, what could be happening here? I think these are all contributing factors to different degrees. Take a look at this. A straw or a brick. A number of things that have happened recently that can be considered straws, but the combined effect is more like a brick. Increasing number of rate hikes and rate hike expectations. I think it might be more of expectations, but anyway. Balance sheet tapering, which is an effective rate hike. Repatriation of tax dollars puts upward pressure on rates. Mortgage rates are at 4-year highs. This will pressure housing. Money supply growth is decelerating. And the tax cuts adding to the deficit. So, those are things that contributed to the VIX sell-off. Take your choice as to which one was the straw. A lot is happening here as I'm recording this here. But you can see that there's a lot of pressure that has been building up in this system. You see that financial establishments are going about their business as normal on the outside, but on the inside, there are a lot of deals that are taking place. The Federal Reserve has to sit down with all these banks and come up with their plans. We know that that's the case, partially from what happened during the financial crisis, but also during the LIBOR scandal, during the different pieces of information like I talked about just earlier with the meetings, the Fed meetings. It doesn't matter. All I know is that the Federal Reserve, the banks, commercial banks, they collude together and they manipulate all of the information that we see, all of these statistics. They can push earnings off into the next territory, and to the next, further down the line. And what we're going to see is a situation that we can't get ourselves out of. There's too much debt. And unfortunately, for the average person, they're entering into a territory that they will be, quite frankly, I'm searching for the words to put it nicely, but I'll leave it there. I'll say screwed, and we'll just move on. Total U.S. household debt soars to record above $13 trillion. Now, while there are some positive signs that have been happening, ultimately we see debt rising higher and higher. Total household debt rose to an all-time high of 13.15 trillion at the end of 2017. That's according to the Fed. The report said it was the 5th consecutive year of annual household debt growth, with increases in the mortgage, student, and auto, credit card categories, right? This doesn't stop. It won't stop. It can't stop. Here you can see the chart form, total debt balance and its composition. Whether we're looking at mortgages or any of the others, it really doesn't matter. I mean, look at how everything has basically been increasing on its own here. You did see somewhat of a deleveraging that occurred after the financial crisis, but it didn't take long to pick up, retrace its steps, and go far beyond that. We are talking about record amounts of debt at a time when people should be more conservative with everything that we've been seeing. This is a big concern that individuals are not really addressing. Revolving consumer credit and monthly change. You can see for yourself here what's happening. I mean, this is basically credit cards, and obviously more and more people are using their credit card to buy more things. That's not an issue if you pay it back within, before the statement is due. However, it's a simple matter of fact that people carry a balance. Home prices hit records in almost 2/3 of the U.S. cities. Now, certainly some are doing better than others. I should say worse or better, however you want to look at it, but obviously the appreciation in some areas are going to be much higher, right? But we're looking at 2/3 of cities at this point. Record highs. And that's great if you're a real estate investor and you like to flip homes or something. But if you're the average person trying to be able to get into real estate, and whether that's for your own personal residence or not, it's a simple matter of fact that people can't afford it. Coupled with all of this, I do think interest rates are playing a role. They see in the future that interest rates are going to rise, and let's say we're at this point here today, and they predict, they've made this assumption, maybe they talk to their banker or whatever, and they say they're going into this territory. You need to get in now. Get your home in now. You'll lock it in for a few years, and then you're going to be totally fine, because apparently you don't have to worry what's going to happen after that period of time. But ultimately, it will be at this juncture, so they might get in now, they might be able to afford it, but at this juncture here, they're going to have to foreclose on their property. It's just the way it goes. They can't afford it, so if they can make the payments now, interest rates are rising, they're going to rise further. There's nothing wrong with renting. If you think that there's going to be a problem in the future, there simply is nothing wrong with renting. It's obviously most people would want to buy a home, own a home, pay it off, and be able to live with lower expenses in this way. But, it's something to consider. I'll leave it at that. This year, a lot of people want to be able to make change. They want to be able to speak their mind. And we know what's happened over the years with the free speech zones, with the obvious censorship that's been taking place. This lady here, she goes in front of the House chambers speaking, gets kicked out. Why? Well, so she starts speaking here, and they're given, she actually talks about it at the beginning, that they're given about 1:45, I believe she said, to speak. While, if you're a lobbyist, you get all the time in the world, conferences and, big engagements that occur. She gets her 1:45. She starts talking about all the people that are getting paid, says names, says amounts, and then you hear an individual speaking that basically said, stop mentioning people's names. And she said, no, I'm not going to stop. So they immediately have these two gentlemen escort her out, and she's still trying to continue on. They forcefully ejected her, and that's what happened. So she has her own website here that she blogged about it, basically. But I just wanted to note the fact that when you think that you can speak your mind, you will get shut down. And that is unfortunately the way that things have been happening. There are new platforms that are coming out there that are allowing much more freedom, that's for sure. They're new, but we'll see what happens with that. Steam it being one of them. Obviously, I don't know what's going to happen with all this business going on with the internet. They're trying to basically clamp down further and further. If you own your own website, obviously you're going to be better off than somebody who is, on another platform, because they ultimately have the last say. If you have your own situation, but then again, you lose a lot of your audience, potential audience. So it's a tough gamble here. If you're interested in what this was all about, I'll put the link in the description as always. But this is the actual article talking about what this individual was unfortunately trying to bring up and wasn't given the time of day. That's the way it works. You're not allowed to bring out the truth. Those who speak the truth will be crushed. If you found this video informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you'll find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can flip through these books at Amazon. There are links in the description below. Take care.